Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, so I got a question about explaining Fibonacci time zones and Fibonacci arcs. So here's what I would say. So kind of a long explanation to explain what a Fibonacci time study is and Fibonacci arcs are. So if I could, I'm going to not answer the question on this because it's a really long explanation. And we have free education on our site at learningmarkets.com on both of those two subjects, by the way. So in fact, pretty much any subject you can think of, we've got something on it. And I go into fairly good level of detail with both a video and a write-up on what those two things are and how you can use them. So go to learningmarkets.com and you can find I think you'll be able to find the answer to that question. What are time studies, Fibonacci time studies with Fibonacci arcs? Steve, does any questions come into you directly that I'm missing here?
Nope, I haven't seen them, although I have another window open, so right now I'm sort of stuck. Keep going, John. You're doing a great job.
Okay, okay. Well, I think
right
I've
now
got,
I'm sorry, I just can't move my screen, so you're going to have to sort of...
Okay, well, no problem. Well, so if anybody sent a message directly to the host and not to the presenter, retype it and send it to me, if you would, so the presenter, just so I don't miss you. And if anybody's got any follow-up questions, feel free to fire away. What I would suggest, this is something I always recommend. You know, when you're trading the options market, I think most of the people here on this presentation are going to be reasonably familiar with options as a concept and trading and things like that. But you know, when you combine options, and there's some complexity there, with currencies, which once again there's complexity there too, it really helps to paper trade it. I know that the FX options site has a great paper trading tool. So they're running competitions and all this kind of stuff. It just makes the biggest difference if you can kind of trade whatever option strategy you like on the FX options contracts and then watch prices move. So you start to understand, okay, so now I start to see how the fundamentals and some of these things affect the underlying prices of the currency exchange rates and how that then translates into price moves in the options that I'm trading. Okay, so here's another question. For the Fibonacci retracement, do you choose any previous low to high or the present low to high or just the last peak? So where do you, and the follow-up question to that from Susan is almost exactly the same. Where do you decide where to anchor the fan or retracement, i.e. where is that 0% line? That's a really good question. You know, technical analysis, there's, you know, any kind of analysis in the financial markets, there's just some inherent ambiguity. But there are some basic ideas. So in my example, I'm looking at if I'm trading on a short-term basis. So if my outlook for my trade is like, you know, a month or 2 months, then I'm probably not going to be looking at much more data than maybe double that amount. So if I'm planning my trade for, you know, that's going to expire in March, say, that's about 25 days away. So I'm probably analyzing, you know, on my chart, I'm probably worrying about, you know, trends and stuff that's going on in the price chart over maybe the last 2 or 3 months. So in the case of YUK here, what I'm looking to be able to do is to apply the Fibonacci retracement or fan lines or whatever it is to the highest high and the lowest low over that period of time. So, you know, that would be why I would be looking here in this case with YUK. I'd be looking at this trend to the downside here from early January through the beginning of February, because I'm planning a shorter term trade, so I'm really just worried about what are the trends or trend segments that have occurred in the short term. Now that's how I answer that question. There's a lot of other ways to. It's not the only way to do it, but that's the way that I would approach it. I mean, if I were to let me see another example. So here on the pound, for example, that's why I'm most interested in this little bounce that occurred here from in the very end of December to the middle of January. Because, if I'm looking shorter term. Now, if I'm looking for a longer term position, so maybe I'm buying a long position that expires, several months in the future, then I'm going to be more concerned about what happened several months ago. So I'm looking for the major highs and major lows of, a year ago or something like that. So, here's I'm going to actually pull up a chart of the underlying here on the. So here's a chart of the underlying currency exchange rate for the euro dollar. And if I back up quite a bit, so if I were trying to trade something that was going to expire in, a year, then I'm going to be much more interested in the major highs and lows, not of the past couple of months, but the major highs and lows of the last year and a half or so. So that's when we start to use a much longer time horizon, and really all we're looking for is just what were the extremes over that period of time. Okay, so let's see. I got another question here. Oh, hey Dave, thanks for the comment. Okay, so Neil, was there a particular reason that you thought the last example would go lower? It had made a higher high before possibly being rejected by the 62% retracement. So Neil, when you say last example, which one are you referring to? Or are you talking about the yen? Maybe you could clarify, because I'm not sure what you mean by the last indicator. So in the meantime, Neil, while you're clarifying your question, Susan asks another question. She's saying, do you use any other indicators as confirmation? Sometimes, and I have a good example of exactly what I would be looking at as confirmation. So, I mentioned that if you're looking at just pure technicals, so there's kind of two different schools of thought in there. Do you use technical indicators, or do you use price patterns and candlestick patterns and things like that? So you'll notice this one right here. So we've got this trend segment that goes, on the yen, from the top of the market in the beginning of January to the bottom of the market in the beginning of February. And right there in the beginning of February, we get a bullish harami. If you know what that is, it's a candlestick pattern that is, one big red candle, which we've certainly got, that occurred on the 4th, and a little teeny smaller green candle that the body of which is encompassed by the larger red candle. So it's one of those. It's like a chart pattern, but it's a Japanese candlestick chart pattern. That's bullish. So looking at that, I would be very interested in the fact that this is a very likely support level, which means, by the way, if I had shorted the market up here, or bought a bearish option trade up here at 91.60 or something like we've been discussing, if I started to get down to this support level, I'd be very concerned, because this little candlestick pattern could create some resistance.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.